Marcelo, welcome, because you were one of those critics last week. When Block announced its layoffs, you posted this on X, quote, "Block's 40% reduction in force is the new Citrini fake narrative. Everyone will assume Jack Dorsey is the, quote, greatest of all time, is doing this because AI. He's not. Block has been massively bloated for years. Don't forget, Jack was head of Twitter. When Elon took over, he fired 80% of staff within 5 months, and the product got better. That was before Gen AI and Claude Code." So is this about AI at all, or not at all about AI?
Yeah, Tim, thanks for having me. I think there's no question that AI is going to make companies more efficient. We heard from Jamie Dimon last week talking about moving people from certain jobs to other jobs where their skills can be better used as AI takes over certain tasks. But as far as Block is concerned, I think it's hard to argue that this company wasn't massively bloated. And I think, in fact, even after this reduction in force, they're still above about 50% more than where they were in 2019. And the company really should be a lot more efficient if you compare them to other global players in fintech.
Well, they didn't have a few things. They didn't have Afterpay in 2019. It was still called Square back then. The company's changed a lot since then. What about instead of using a fintech as a corollary, we use a company like Anthropic as a corollary, a company with more than $300 billion in valuation in the private market and just several thousand employees. That's sort of the AI angle there. Does that make sense?
Yeah, I think it does. In fact, I did a ranking of Block a few years ago where you could go and look at how much in gross profits different companies generated, even from different industries, because that is really the metric that matters for Block is gross profits. That's really their top line. And then how much of that drops to the operating income line. And Block was dead last, almost, next to a cruise ship company. So across different industries, including software, fintech, et cetera, Block was really showed very poorly in terms of efficiency. They were eating up a lot of dollars between those two lines, gross profits and operating income, in things like R&D expenses, general administrative, sales and marketing, et cetera.
So if you were sitting down with Jack Dorsey, what would you be asking him? What do you want to know from him right now?
Well, I'd say, Jack, is this reduction in force really the most that you could have done? If you could pull an Elon here, how far would you go? And is there more to come? Because still the margins that they're guiding to next year are about 26% EBIT margin compared to gross profits. But a company like Adyen is at 69%. A company like Nubank is at 66%. PagSeguro is at 34%, StoneCo is at 43%. So they could be even more efficient than they're projecting for 2026 now after this reduction in force.
Do you think, just based on what we saw in the share price on Friday, jumping almost 17%, 21% at its highs intraday, but finishing with a 17% gain, another 0.5% higher today, Marcelo, that you think that is maybe, I don't know, what message does that send to Jack Dorsey? I mean, obviously, the investors are behind it. Are they misreading it, though, in your view?
I think short-term stock price moves have a lot of noise. There could be short covering in the stock. I don't have the short data right in front of me right now. But there's no question that this increases the probability of them actually achieving that metric, which is earnings per share that investors actually want to see. A few years ago, I think it was almost 2 years ago to the date, I sent Jack and Amrita an email with a projection showing about $4 in earnings per share for 2026. I think they're going to deliver, according to their guidance, $3.66. Of course, they're probably trying to beat that. So they are actually now, finally, after this reduction in force, delivering the high end of my estimate from 2 years ago. And frankly, they should continue on this path, and hopefully they do. And I hope shareholders enjoy that ride, because it's better late than never that the company should become more efficient.
Are you a shareholder now?
I am not a shareholder now. I was a frustrated shareholder for many years, and I kept trying to get in touch and engage the company on this topic of becoming more efficient, showing them this is what your valuation will be if you deliver these numbers. This is what the IRR between the current share price and the future share price could be. And it was not very fruitful, so I moved on.
Would you invest in the company again?
Look, if I have proof that Jack and Amrita have really changed their stripes and they really are focused in generating shareholder value, then yes, I think I would, because I do think Jack is a visionary. He's a great product guy, but I do think that the company was really not run for shareholders historically, and I would like to see if he could marry both things: be a product visionary, be good at executing, and be a good steward of shareholder capital. Then this company could do extremely well for shareholders as well.
Yeah, it's kind of interesting, I guess, to have this happen on top of the Citrini research, this nightmare of kind of mass unemployment, and that certainly spooked the markets when that report came out. We just talked, with Danny Moses, founder of Moses Ventures, of course, the Big Short fame, if you will. But this idea that some of these things coming out, and I'm just going to go to the Citrini research, that maybe it's just, a longer term view of perhaps where these things are headed. Because if you do talk to a lot of executives, they're very careful in terms of the impact on the company, but it's hard to ignore that things are changing. When it comes to the impact of AI, how do you put it kind of in its proper place, or what is your view on what is the AI trade, the AI scare? What is the proper place for investors? How should they be kind of reading into it?
Carol, I think every investor should try to vibe code with Claude and with Claude Code and Codex as well from OpenAI. They're fantastic tools. I've been using them a lot. I used to be a software engineer earlier in my career, and it's not the panacea that it's sort of this magic wand that everybody claims it is. I one-shotted this or that application. It's actually pretty complicated, and you have to guide it a lot. Yesterday, I spent a lot of hours coding a plugin for Excel that I want to do certain things, looking up a certain API, etc. So this still requires a lot of guidance. Yes, I do understand the science fiction future, but I think some of the smartest voices now are really actually the guys trying to disrupt the incumbents. And those are the top venture capitalists in the world, people like Mark Andreessen from Andreessen Horowitz, right? And if you listen to what his firm is saying, these guys are in the business of disrupting incumbents. They are saying that AI will be actually a tailwind to the best enterprise software companies. So when the guys saying that, and they have a vested interest in disrupting the incumbents, right, maybe we should listen to that signal, right?
Yeah, there is certainly something to that. I do want to be fair. Jack Dorsey did take to social media on Friday and responded to one critic who pointed to the accusations of bloat that have dogged his companies. He acknowledged the company has overhired during COVID and operated inefficiently when he ran Square and Cash App as two separate businesses. He went on to say the Block had corrected for all of that and that it now aims to generate more than $2 million in gross profit per employee, quadruple what it was generating pre-pandemic. And then Block's chief financial officer said in an interview with Bloomberg, "We are taking bold and decisive action here, but we're doing it from a position of strength." So just wanted to share that with everyone as well.